In January, I did a video about whether or not you should buy a home in 2023. And this video is essentially an update to that. I'm sharing some more stats, trends, and also some predictions for the rest of the year. If you haven't watched the first video, I would check that out first, because in that one, I kind of lay a foundation of where I'm coming from. If you like these videos, make sure that you subscribe so you're not missing them when they come out. Also, I would love to hear what your thoughts are in the comments below. So if I say something and you're like, well, I don't know if I agree with that, or I have a question about this, feel free to just leave a comment, and I love engaging with people in the comment section. Also, of course, if you're considering moving to the Oregon area and need a real estate agent, feel free to reach out to me, and I would love to either help you myself or connect you with someone who would be a great fit for you. I love answering people's questions. My contact information is right there at the bottom of the screen. You can feel free to call me, text me, email me, or you can reach out via my website. Whichever way is easiest for you works for me. And just as a precursor for what I'm going to be talking about, always check your sources. I've done a lot of research in what I'm about to share with you, but it's extremely important for people to dig into the data themselves and know what's going on. One of the problems, and one of the things that makes this pretty difficult, is sometimes it's hard to know what data you should be analyzing. For example, you can take a statistic, and if you take just that, it looks like the market is going to do something completely different than if you take another statistic that could also look like it's going to do the same thing, but the outcome is very different. My point is, there's a lot of misinformation out there, a lot of news outlets and media sources that are just trying to get clicks, and they take something like the economy not doing well and turn that into the narrative about the housing market. It just doesn't work that way. So it's important to know how this all works, understand the foundation, and that's part of what I'm going to be sharing today, and like I mentioned, what I shared in the previous video. So keep watching to hear my thoughts about what the market is going to do for the rest of the year. So are we heading into a housing crash in 2023? There's been a lot of changes in the economy. The Fed's been doing a lot of things that a lot of people disagree with, and there's a lot of interesting data points that show that the economy is slowing. What does that have to do with the housing market? How does the economy as a whole and the housing market, how do those work together? And does a failing economy mean that the housing market's going to fail, or are they two different things? Well, let's dive into some of the stats and numbers. Also, if you watched my last video, you probably know my thoughts on this, but it's important to take another look with some of the updated data. Much of what I'm sharing today comes from Barry Habib with MBS Highway. Barry is one of the most accurate predictors of the economy and the housing market, and he recently did an hour-long webinar just packed full of data. So I'm going to be taking some of those pieces and sharing why they're important, how it relates to the economy in Oregon. I'll also be sharing some other pieces of data about our economy as a whole and also local here in Oregon. So first off, we've been hearing a lot about recessions, and most people, when they think of recessions, they think about 2008 and 9. That was the major housing recession that caused pretty much the entire economy to collapse. I've been hearing a lot of people compare what's happening right now to 2008 and 2009, but there are several extremely important differences, and I'm going to go over those right now. So what are the differences between what was happening in the early to mid 2000s and what's happening now? Well, the first thing and the most important thing is that the housing market crashed, and that's what led to the economy failing. Whereas right now, the economic factors causing the slowdown are primarily interest rates. The Fed has raised the interest rates, it slowed the economy, and now we're seeing the implications and ramifications of that. But many of the factors that affect the housing market are very different this time around. So let's take a look at what those are. Number one, in 2006-07, that time frame, there were too many houses being built. Let's take a look at this graph. In 2007, there was an inventory of 4 million homes. And this year, it's gone down to 980,000. So we're about 25% of the inventory levels that we were at in 2007. Builders were just going crazy and building homes, building homes, building homes. And in the end, they completely overbuilt, and that's what caused the market to crash. There were too few people, too many homes. It's basic supply and demand. When there's too many products and too few people wanting them, the value of the products goes down. Right now, the inventory levels are extremely small. What's happening is the reason people aren't buying tons of homes and the prices aren't going up like crazy is because interest rates are so high. People just can't afford the homes. And that's kind of what people are thinking. Well, because of that, is the market just going to crash? Let's look at this other chart that shows this a different way. So what's shown here in gold is the number of housing completions. So builders were working on homes, and how many homes did they actually complete? So you can see 2004 through 2006, and then it started to go down in 2007. There were tons of new homes being completed. Now look at what's happening here in the blue. This is household formation. So anytime that there's a kid leaving their parents' house, they're going off to rent or whatever, there's a divorce. Anytime there's a new household being created, that's what's happening here in blue. Now look what happened here in 2006, 2007. This dropped off a cliff. Now, why did that happen? There's different speculations. I'm not going to get into all that right now. But let's look at this other chart about US births by year. When you look at birth rates, you can project that out and see, well, how many people are going to be a certain age, however much later. So the median age of buying a house is 33 years old. That's what it was in 2006 too. So what we're seeing is there's already not enough houses, but then there's more people who are getting ready to buy houses at that age where they're going to want to buy their first house. So this is causing a huge supply and demand problem. The supply is low, it's been a problem, but now the demand is about to increase. That's going to cause a problem. Looking at this another way again is the vacancy rate. So the homeowner vacancy rate and the rental vacancy rate has been steadily declining over the past decade or even more. So whatever happens, the market is not going to crash. There's too many people who want homes and too few homes available for the values to continue to go down. Whether interest rates stay the same or whether they come down a little bit, the value of homes is solid. We're not going to be seeing a crash. In fact, we could be seeing prices go up even more, as crazy as that sounds, and I really do not want that to happen, but from what we can see in the data, that's what it's looking like. And I want to add one other piece of perspective here. Zonda did a survey for renters, and what they found is that 53% of renters are renting because they're waiting for prices to come down. When you look at this chart, over half of the people are renting because they're waiting for prices to come down. But again, the only reason prices went down is because interest rates went up. The prices are probably not going to come down anymore. And that's kind of a scary thought, because as soon as interest rates come down, affordability would seem like it would increase. But if interest rate comes down and those 53% of renters start entering the housing market looking for homes, that's going to cause more bidding wars, which would cause prices to go up. So my whole point in all of this is, if you're renting, waiting for prices to come down, now is actually probably the time to get into the market and see if you can still get a seller credit while the competition is relatively low. And look, if you have questions about this, or you're wondering like, how does that all work? Is that really what's happening? Or you've got maybe you disagree with something, feel free to reach out to me and ask questions. Okay, let's take another more local look. I'm going to use an example from where I live in Yamhill County. This is a real estate report card from David Kimmer, and it shows another side of what we're talking about on a local level. So about 1,300 household formations. This is on an annual basis. These check marks show how many homes are needed and how many homes are actually being built. Again, this is a supply and demand issue, and when there's not enough supply and too much demand, prices will go up. Now, the nice thing is, over 1 year, the appreciation is only expected to be about 3.13%. So this is the forecast by MBS Highway, but over 5 years, that compounds to about 22%. And on the left-hand side here, you can see what the historical appreciation has been over 60 years. It's been about 5% per year. Over the past 5 years, more in that 7% range. So we're going to be seeing appreciation coming down a little bit, which is nice that we're not going to be seeing like 20% appreciation again. But the point is, if you're renting, price right now in Yamhill County, $463, according to this, is going to be worth in 5 years about $100,000 more. If you're waiting, it's probably not going to pay off unless you're planning on moving within a couple years. Buying a home right now is most likely going to pay off. Bottom line is, we're not going to see a housing crash. It's to be determined exactly what the market is going to look like, how much prices will go up, and what inventory will look like. The point is, if you're waiting to buy a home until prices come down, probably not a great idea. Okay, well, I shared a lot of data in this video, and I would love to hear your thoughts in the comments. Love to hear what you think. Feel free to check out some of the other videos in our channel, and I'll catch you in the next video.